Good day, everyone. Welcome to my channel. Today we'll be taking a look at asset disposal. This is a very important topic in grade 11. This topic is usually done around term 1 or term 3 when you're doing fixed assets. So for the purpose of this video, we'll only be focusing on the asset disposal part because that's the part that most students find challenging. So in this video, I'll explain what is asset disposal, and I'll also provide you with two examples on how to complete the asset disposal accounts. So please watch this video until the end so that you do not miss any information. So it's important that you actually watch the video. Also, please don't forget to hit that subscribe button if you haven't hit it yet, and also like and share the video. Okay, without wasting any more time, let's get into our example. What is an asset disposal? I mean, the name tells you disposal. Disposal means to remove or dispose of. So when a business buys an asset and they no longer require that asset, they usually dispose of the asset. And there are many ways in which a business can dispose of the assets. So the business can either sell the asset on credit, they can donate the asset, the owner can take the asset for personal use, or it can be traded in. When an asset is traded in, it means that you swap it basically. You swap your old asset for the new one. So there are three ways in which an asset is disposed of. Firstly, it's on carrying value. Carrying value is basically the selling price of the vehicle, like the retail price. I'm sure by now you know how to calculate depreciation, and once you calculated your once you take your cost minus your accumulated depreciation and you get your carrying value, that is your carrying value. That is the selling price of the vehicle. Then it can be disposed of at profit. So profit is basically you sold it above the selling price. So if your vehicle was worth at 200 Rand and you sold it at 300 Rand, you made a profit. Then at a loss, which means you sold it below carrying value, sold it below retail price. So if your asset is worth 200 Rand and you sold it for 100 Rand, you actually made a loss. So that's what asset disposal is useful for. It helps us calculate how we sold our assets. Did we make a profit? Did we not make a profit? Or did we make a loss? So without wasting any more time, let's get into our example. So the first thing I'm going to show you is the format of the asset disposal account. So this format is very important. So I suggest you pause the video and actually take it down. So here on our debit side, we have equipment or vehicle. This is basically the cost of the vehicle that we are disposing of, or the vehicle we are selling. What is the cost? The cost goes here on the debit side. So usually they tell you that the cost of the sold vehicle was 3,000 and you're going to record it here. Then on your credit side, you have your accumulated depreciation. So they also gonna usually they give you your accumulated depreciation, but also in some cases they don't give you accumulated depreciation and you actually have to calculate it yourself. So that's what we'll actually be doing in this video. In the second example, I'm gonna show you how to calculate accumulated depreciation if you are not given the accumulated depreciation. Then then after you've recorded your accumulated depreciation, you record your selling price. Now, the details for the selling price usually are different depending on what they tell you. So if our vehicle was sold for cash, it will be bank. And if our vehicle was sold for cash, then our details is going to be bank. And if our vehicle was sold on credit, it's going to be debtors control. And then if it was traded in, creditors control, donated, donations, and if the owner takes it for personal use, it's going to be drawing. So you record your selling price here, and they will tell you that the vehicle was traded for this amount. That's when you record your selling price here. Then the most important part is the loss on sale of asset. and the profit on sale of asset. So the asset disposal account, when you close it off, if your balance carried down is on the credit side here, we call that a loss on sale of asset. Take note, I said balance carried down, not balance brought down. So if your balance carried down is here on your credit side, we call that a loss on sale of asset. That means you sold the asset and you made a loss. But if your balance carried down is on the debit side, we call that a profit on sale of asset. You're gonna see more when we start to do our example. So let's get started on our example. Here we are provided information for ZZ Traders, and their financial year ends on 28 February 2021. Another important thing you need to know is you need to know when your year starts. If they give you the end, you need to know the start. So usually they give you the end date. They tell you that it ends 28 February 2021. So it's really simple. If it ends at 28 February, you just go the following month, but the previous year. So 28 February 2021, that means our year started at 1 March 2020. Also, you can see here where they gave us our balances for 1 March 2020. That's our opening. That's when the year starts, our financial year. Then they gave us our equipment, accumulated depreciation on equipment. For the purpose of this video, we won't be looking at these balances. We'll only be focusing on this part. So these are for when we complete our fixed assets. So I'll try and put the link to the fixed asset video at the end of this video. But today we'll only be focusing on this part, which is our asset disposal. So here we are told on 31 August 2020, ZZ Traders sold an old typewriter, which is equipment, on credit to George for 1,050. So we are told it's a typewriter, which means it's equipment, and on credit, that means our detail is gonna be debtors control. If you forgot where I'm getting this, go back to your formula and copy it down. It's really gonna help. Then the original cost price was 2,200. Like I said, they give you your cost price. Then the total amount written off for the depreciation at the end of the previous financial year was 800. So this means that this is our accumulated depreciation. They gave us our accumulated depreciation again. Then we are told depreciation is calculated at 20% per annum at cost price. So the first thing we're going to do is draw up our asset disposal account. There it is. Feel free to go back to the video where I explained the format and take down the format as you are watching this video, because that format is very important. So the first thing we're going to do, according to the format I shared, is record our cost price. So we are told it's equipment. So we write it here on the debit side, and they gave us the amount, which is 1,050. We write our amount. No, the cost price was 2,200, my mistake. So we write our amount here, 2,200. Then here on the credit side, we're going to write our accumulated depreciation. But that is not all. For accumulated depreciation, that's the one where we actually do calculations. So we're going to record our 800 plus, but we're going to open a bracket and put a plus sign because it's not complete. What we need to do is push the accumulated depreciation from when our asset was bought to when it was sold. So our asset was bought on 1 March 2020, and that's why we put the 800. That was our accumulated depreciation at the beginning of the year. So now what we need to do is push this accumulated depreciation to the 31st of August 2020 when we sold our assets. So that is really easy. What we do is we need to calculate our depreciation from 1 March to 31 August 2020. So once we calculate our depreciation, we add it to the 800, and once we add it to the 800, that's gonna push our accumulated depreciation from when we bought our assets to when we sold it. So I'm just gonna calculate my depreciation here. So here's our calculation: 2,200 times 20 over 100 times by 6 over 12. So the 2,200 is on cost, as we are told depreciation is calculated at 20% per annum at cost price. So 2,200 is our cost. 20 over 100 is 20%. We are given here 20%. Then 6 over 12. 6 over 12. Now, like I said, we want to push it from 1 March to 31 August. And if you count from 1 March to 31 August, that's 6 months. So you're going to count March, April, May, June, July, August, 6 months. So we times it by 6 over 12. So that gives us 220, which is our depreciation. So we're going to take this 220, add it to our 800. Then we close off our brackets. Basically, that was it. That's really most of the calculation you need to do is accumulated depreciation. But keep in mind that this is just a first example, and this is the most simplest way they can ask asset disposal. In our next example, we're gonna do a lot more calculations than this. This one is really simple. So once you've done that, you add up. This is gonna add up to 1,020. Now that we've added that, we record our selling price because now they told us that we sold it on credit for 1,050. So we come and record it here. If you forgot, again, go back to the video, look for the formula, copy it down. You're going to understand better. It works better once you know the formula and you memorize it. So we write debtors control because we sold it on credit, 1,050, which is given here. So now that this is basically it, you're done with your asset disposal account. So now all you need to do is add up the bigger side. Once you add up the bigger side, in my case, if you add these two up and add this one, equipment is the bigger side. The debit side is bigger, so we want to close it off 22,000, 2,200. That's our bigger side. Now you say bigger side minus smaller side. Now, if the balance carried down is on the credit side, like I said again, we call that loss on sale of asset. If it's here on the debit side, we call that profit on sale of assets. But in our case, since the debit side is bigger, that means our balance carried down is going to be here on our credit side. So we're going to call it loss on sale of asset. Write it in full. It's just that I didn't have space here. Loss on sale of asset. And if you say 2,200 minus both these amounts here, you're going to get 130. So we're done with the first part of our asset disposal. This is the simplest way they can ask it. This is the easy one. So now let's go to our next example. So now we're doing our next example. So here, traded in an old vehicle on 1 July 2018 for 55,000 on a new vehicle costing 150,000. So we're not gonna, for the purpose of this video, we're not gonna consider this 150,000. We're just gonna ignore it because that's something we need to do our fixed asset complete the. But here we're only focusing on asset disposal. So you must break down the information that they give you, break it down. So first we are told traded in an old vehicle on 1 July 2018 for 55,000. So that's the first part. We traded in, it was old, the date was 1 July, the selling price was 55,000. So since we traded it in, our details is going to be creditors control. Like I said, if you forgot, go back to the video, find the format and write it down. Then bought on credit from Dry Hearts Motors. The traded in vehicle was bought on 1 January 2015 for 100,000. Pause again, break it down. The traded in vehicle was bought for 100,000. Now, the difference between this video and the previous video is this. Here, they don't give you accumulated depreciation, but in the previous video, they gave you. Instead, here they give you the cost price of that vehicle. If you go back to the previous video, they did not tell us when the vehicle was bought. They never mentioned it. They just told us that the vehicle is costing this much and the accumulated depreciation was this much. But in this video, in this slide, my bad, in this slide, they don't tell us the accumulated depreciation. Instead, they tell us that this vehicle was bought on 1 January 2015, and they tell us the price it was bought for, the cost of the vehicle. Then our second point is depreciation on vehicle is calculated at 20% per annum on the diminishing balance method, carrying value. In the previous example, we're using cost method. By now, you guys are grade 11s. By now, you should know how the difference between the diminishing and the cost price method. So the first thing we want to do again is open our asset disposal account. So now, another important thing I missed here is when our year starts and when our year ends. So here they tell us that you are provided with information relating to Friends Traders on 31 December 2018, the end of their accounting period. Again, like I said, if they give you the end, just go 1 month forward but 1 year back. Basically, our year starts in 1 January 2018. No, don't go 1 year back, because like obviously if our year ends in December, when does it start? It starts in January. So the start of our year here is 1 January 2018. That previous video, the previous example was kind of different, but here this one is obvious because if the year ends in December, it obviously starts in January 2018. So our start of the year here is January 2018 and our year end is December 2018. So another thing that we are told here, like I said, is the cost. So we're gonna come here and record our vehicle and our 100,000. If you don't know where this is coming from, again, go back, find the format, copy it down, and come back to the video. You understand. We are given our cost. We record it on the debit side. Nothing to do there. Then now on the credit side, we come here and record our accumulated depreciation. But remember, in this case, we are not given accumulated depreciation. Like if you look anywhere here, you won't find it. We are not given, but we are told that our asset was bought on 1 January 2015, and that is going to help us calculate our accumulated depreciation. Let me just pull out my space here. So I'm going to calculate my accumulated depreciation here. So now the first thing you must do is write down when was this vehicle bought. 1 January 2015. So basically what I'm doing here is an asset register, but this is like a short version of the asset register, because in the exam you won't have proper time to drop a whole asset register. So this helps. This is just a short version of the asset register. So now our vehicle was bought on 1 January 2015. You write it down. So now from it has to be 1 year. So now we need to calculate depreciation for all the years from 1 January until when we sold our asset, when we traded in our vehicle. So we need to calculate depreciation for 2015, 16, 17 until 2018. So now if our year started on 1 January 2015, that means it ended on 31 December 2015. That one was pretty simple. So now for this year of 1 January 2015 to 31 December, we want to calculate our depreciation. So our calculation is going to be this: 100,000 times 20 over 100 times by 12 over 12. So 100,000 is our cost, times 20 over 100 is the percentage we given, times by 12 over 12, because from 1 January to 31 December it is 12 months. I know they said on diminishing balance method, but since this is the first year, we do not have an accumulated depreciation, so we're just going to calculate it on cost. So our answer is going to be 20,000. Now once you've done that, you move over to the next year. So December 2015 was the next year. 1 January 2016, that's like new year. So if it started 1 January 2016, it obviously ends on 31 December 2016. Now again, we calculate our accumulated depreciation, my bad. But in this case, we are given, we have an accumulated depreciation. The 20,000 is going to function as our accumulated depreciation for the next year. So our calculation is going to be a little different from this one. It's going to be 100,000 minus 20,000 because it's on diminishing balance, and our 20,000 is from the previous year. This functions as our accumulated depreciation for the year of 2016, times by 20 over 100, what we're given here, times by 12 over 12 because from January to 31 December it is 12 months. That's going to give us 16,000. Now again we go to the next year, 1 January, it ends 31 December 2017. Now our accumulated depreciation for this year is not only going to be the 16,000, but it's going to be the 16,000 plus the 20,000. We need to add the two. Has to be the 16,000 plus the 20,000. So our calculation is going to be 100,000 minus 36,000. The 36,000 is the 16 plus the 20,000 times 20 over 100 times 12 over 12. That is going to give us 12,800. Now, this is the most important part. You need to really be alert here. Since we're going to the next year now, which is 1 January 2018, this is the current year we're working on. Remember, we said our year ends 31 December 2018. That means it started when? 1 January 2018. So this is our current year. Now that we're in the current year that we're working on, we need to be really careful here. So our year, we're not going to push it to 31 December this time. We're going to push it to when we sold our asset. Remember when I started, I said we're going to push our accumulated depreciation from when we bought the asset, which was 1 January, to when we sold it on 1 July. So 1 January until now, when did we sell our asset? 1 July 2018. So now our accumulated depreciation for this year is going to be the 12,800 plus 16,000 plus 20,000. That same accumulated depreciation you get here was the one they supposed to give us here if they had given us a accumulated depreciation. The answer was supposed to be here. So our calculation is going to be a little bit different here. It's going to be 100,000 minus 48800. The 48800 you get it from adding the 12,800, 16,000, and the 20,000. So times it by 20 over 100 and times by 6 over 12, because from 1 January 2018 to 1 July 2018 it is 6 months. You're going to say January, February, March, April, May, June. By now you should know how to count months. June, which is 6 months. So our answer is going to be 5,120. Now you are done. You have all the information you need here to complete your asset disposal account. So like I said, this 48800 is our previous year's accumulated depreciation. If they had given us an accumulated depreciation here, it was supposed to be 48800. So we're going to record it there. We're going to record it here in our open bracket, 48,800, but we're not done. We still need to push it to when we sold it. So we're going to add our 5,120, our depreciation. Now we've pushed our accumulated depreciation from 1 January to 1 July. We've pushed it from when the asset was bought on 1 January to when the asset was sold on 1 July 2018 using this cost price. I hope you understand, because this is very important. On most of the exams, they won't ask that first example I showed you. They usually ask this one because this is the difficult one. So you need to master this one. If you feel like you don't understand, feel free to go back in the video, learn it again, master it. It is important that you master how to do this. Then again, if you forget the formula, go back to the start of the video, write it down, and yeah, that should really help you memorize this and master the topic. So now that we've recorded this, we now record our selling price on the credit side. So we are told that our vehicle was traded in. That means our details is going to be creditors control. Creditors control. Oh, also, please add this up. It's going to give you this amount. Then you get your creditors control. Now that you've gotten your creditors control, it's going to be 55,000, which is we told here for 55,000. So yeah, basically you're done. So all you need to do is find the bigger side and write it down. So in our case, the credit side is the bigger side because if you add these two, the credit side is 108,920, which is bigger than the 100,000. So you come here also record it on the debit side. Now, again, the most important part, if our balance carried down is on the credit side, we call that a loss on sale of asset. And if it's on the debit side, we call that a profit on sale of asset. So in our case, it's going to be on the debit side. That means we made a profit on our asset. And the profit we made was 8,920. Because when you take this and subtract this, you get this. So yes, basically we're done. You have successfully completed your asset disposal account. That is how we complete our asset disposal account. I hope you had fun. I hope you have fun watching the video, just like I had fun making it for you. Also, please hit that subscribe button if you haven't subscribed yet, and also like and comment in the comment sections if you have any questions or if you want me to cover another topic that you don't understand. Thank you and bye.